Every day, healthcare and assisted living business owners lose thousands of dollars. Not because they're bad at care, not because they don't work hard enough, but because their financial systems were never designed for the industry they're in. Hi, I'm Larry Davis, founder of Tax Help. We help assisted living and healthcare business owners to clean up their books, reduce their tax bills, and finally get control of their finances. Assisted living isn't retail, it's not real estate, and it's definitely not simple. You're balancing patient care, medical compliance, staffing, and state inspections. Yet most owners are still running their books and taxes like any other small business, and that's where the chaos begins. Behind the scenes, those outdated systems quietly leak money, month after month. Payroll taxes misclassified. Care-related expenses never deducted. Energy-efficient credits completely missed. It's not about negligence, it's about not knowing what's possible. Because when you don't have a financial framework tailored for healthcare, your numbers stop working for you and start working against you. But here's the truth. Every one of those leaks can be fixed. With one organized framework, you can finally see where your money's going, claim every dollar you've earned, and run your facility with the confidence of someone who truly owns their niche. In this video, we'll uncover the hidden financial traps most owners fall into and show you the 10 tax strategies for healthcare businesses and accounting frameworks that transform chaos into clarity. Frameworks that make you feel organized, confident, and in full control of your business. Strategy number 1, the hidden tax leaks in assisted living operations. When you run an assisted living facility, your financial structure is unlike any other business. You're providing care, housing, and medical services under one roof, but most owners still treat their books like a generic rental or service company. That's where the money starts leaking. The hidden vulnerability, blended expense categories. When staffing, supplies, and rent income are all mixed together, you lose visibility on which area drains your profits. But when your accounting helps you understand your cost per resident and per department, you don't just survive, you lead. When one of my clients reorganized their books this way, they uncovered over $18,000 in missed deductions and finally saw where profit was truly being made. This level of clarity is what separates assisted living owners from assisted living operators. Strategy number 2, payroll that pays you back. Your caregivers and nurses are your greatest investment, but also one of the biggest tax opportunities most owners overlook. The common oversight, treating payroll as a single lump sum expense. Healthcare businesses qualify for specific employee-related credits, like the Work Opportunity Tax Credit for hiring long-term unemployed workers, or deductions for caregiver training and certifications. Here's the framework. Let us segment your payroll by role and track every training expense as a separate category. These aren't costs, they're tax-saving actions. One assisted living owner I worked with implemented this and saved 12% in payroll taxes in the first year. When you start treating payroll as a tax strategy, and not just a cost, you'll have more control, more savings, and more capacity to reinvest in your team. That's what leadership in healthcare finance looks like. Strategy number 3, depreciation power plays. Most assisted living owners underestimate how powerful their assets are, not just in care quality, but in tax savings. Your building, medical beds, adaptive equipment, and facility improvements all qualify for accelerated depreciation. The costly mistake? Recording them as regular expenses or not claiming them at all. Here's the framework. Categorize every major purchase or upgrade under the correct asset class and consult with us about Section 179 or bonus depreciation options. One operator reclassified 5 years of equipment and facility updates, turning them into $26,000 in immediate deductions. This isn't about gaming the system, it's about using the laws designed for you. Healthcare is capital intensive, and when you use depreciation strategically, you free up cash to improve resident care and expand capacity. That's how professional healthcare CEOs think. Strategy number 4, the compliance cash flow connection. If you run assisted living, you're already managing mountains of compliance records like staff training logs, safety inspections, and facility upgrades. What most owners don't realize is that these same records hold thousands of dollars in deductible proof. The disconnect? Compliance and finance teams working in isolation. Here's the framework. Link every compliance item with its financial impact. For example, fire safety upgrades go under facility improvements, while ongoing staff training links to deductible professional education. One client in Florida integrated compliance tracking with expense reporting and uncovered $14,000 in tax-eligible costs that had gone unclaimed for 2 years. When compliance and finance work together, you don't just pass audits, but you pass with profit. That's how high-performing healthcare owners stay both compliant and cash positive. Strategy number 5, splitting care and rent, the game changer. One of the most common and costly mistakes in assisted living tax strategy is mixing care revenue with rental income. They're not the same thing, and treating them as one confuses your books and limits your deductions. The solution gap? Lack of clear separation between income streams. The framework: use a dual ledger system. Care income, nursing, meals, activities, goes in one ledger, housing income, room fees, leases in another. After implementing this system, one owner I worked with discovered that her care income was subsidizing rent operations. She adjusted rates and improved profit margins by 22%. Separating these streams helps with compliance, valuation, and taxes. This is what organized, credible operators do. They know exactly where every dollar comes from and where it goes. Strategy number 6, structuring for success. Your business structure determines how your taxes behave, but most healthcare owners never revisit their entity choice after setup. The hidden constraint? Staying as a simple LLC or sole proprietorship when your operation has outgrown it. Here's the framework. Review your legal structure annually. Many assisted living facilities benefit from an S-Corp structure for payroll optimization or a 2-entity model, one for property, one for operations. One facility owner switched from an LLC to an S-Corp and reduced self-employment taxes by nearly $19,000 per year. It's not just about saving money, it's about protecting your business. When you structure like a CEO, you protect your assets and position yourself as a serious healthcare entrepreneur. Strategy number 7, the overlooked tax credits every facility misses. Most owners don't realize that their daily operations qualify for state and federal tax credits. From energy-efficient lighting upgrades to accessibility renovations and healthcare employee retention credits, money is left on the table every year. The breakdown? No system for identifying and tracking these credits. Here's the framework. Conduct a quarterly tax credit audit. Review maintenance logs, HR records, and capital improvements to catch qualifying expenses early. One client claimed $22,000 in retroactive credits after realizing their HVAC and safety upgrades qualified for energy incentives. This is how you turn your operational upgrades into financial wins, by being smart, proactive, and strategic. That's what owning your niche truly means. Strategy number 8, forecasting cash flow. Cash flow in assisted living can swing wildly when admissions fluctuate, payroll spikes, and emergencies happen. The weak point, waiting until tax season to see what's left. Here's the framework. Let us help you determine the correct percentage of revenue every month to allocate in reserves, then conduct quarterly reviews to adjust based on actual performance. A facility owner who adopted this system stopped relying on loans during tax season and built a steady reserve within 6 months. But forecasting cash flow isn't just about saving money, but it's also about giving you control, predictability, and peace of mind. In assisted living, financial stability equals better care. That's the mindset of a true operator in command. Strategy number 9, building your financial dream team. Running a healthcare business is complex, and relying on a generalist accountant is one of the biggest blind spots. Most CPAs don't understand healthcare-specific deductions like care-related depreciation or compliance-linked expenses. Here's the framework. Make sure your financial dream team includes a tax and accounting professional familiar with healthcare or assisted living operations and understands growing businesses in regulated industries. One multi-facility owner's dream team was able to cut tax prep time by half while identifying $35,000 in additional deductions. This isn't just about delegation. It's about building a foundation of expertise that keeps your operation compliant, efficient, and credible. That's how leaders own the niche. Strategy number 10, the assisted living CEO mindset. At the end of the day, great assisted living owners share one trait: they manage their finances with the same precision they apply to resident care. The downfall, treating tax planning as an afterthought instead of an executive priority. Here's the framework. Run monthly financial checkups like clinical ones. Review profitability per resident, tax allocation progress, and deduction tracking. One facility went from reactive tax filings to year-round strategy meetings and increased annual profit margins by 17%. This is what real ownership looks like, understanding that financial clarity drives mission clarity. When you lead your facility with both heart and numbers, you don't just survive, you set the standard for the entire healthcare industry. When you look at everything we've covered, it's clear assisted living and healthcare businesses can't afford to run on generic financial systems. The leaks, missed credits, and tax gaps we discussed, they silently drain thousands every year. But with one organized framework built for healthcare, you can stop guessing and start leading with confidence. This isn't just about saving money, it's about owning your numbers, protecting your mission, and finally, running your operation like the specialized business it truly is. Set it up right, and you'll gain control, clarity, and peace of mind. Because when your finances align with your purpose, your business doesn't just survive, it thrives. If you're an assisted living facility or a healthcare business owner overwhelmed by tax confusion or financial chaos in your business, subscribe right now. Every week I share real strategies to legally help you reduce what you owe. Also, we'll send you our 10 tax strategies for assisted living and healthcare businesses to reduce their tax bill just for liking this video.